So today let's talk a little bit about yield curve inversion. This is something that everyone's been talking about. If you've been watching CNBC or anything else, everyone's talking about how part of the yield curve has been inverting at least just a little bit. Now, I want to clarify this for you to make it real simple and to make sure you don't get confused or scared or whatever the outcome might be. Number one, yield curve inversion, it doesn't really matter in what shape or form it takes place. It usually means that interest rates are going lower to some extent, right? Now, if you look at this through the lens of what's been happening for 12 months now, and if you've been following these YouTube videos, or if you're a paying subscriber or a direct client, you know we've been saying that economic growth globally has been decelerating for, like I said, about 12 months, actually more than that. So this is really nothing new, and what we're seeing now is because the Fed basically pivoted from raising rates to stagnating and potentially even at some point later on this year, potentially lowering rates. This is just a function of U.S. interest rates also now coming down in line with what we've seen a lot of parts of the world. Now, of course, two questions, or one question you're probably asking is, what does it mean for stocks? Well, we are going to see less growth. We have seen less growth. So for the stock market to continue to accelerate at the rate at which it has been is simply not real. I'm going to show you guys a couple of charts in a second, but one thing I think that's important to note here is a lot of people say, well, the Fed has now paused. The Fed's gone on pause, and they're going to avert, any more further deterioration in the economy or a recession, if that's the word we want to use. Well, that's normal. The Fed will always stop raising, and then the economy actually gets worse. It happens in a lag effect. So I'm going to quickly show you a chart that basically shows this real simple. And what you can see here is in one chart is essentially U.S. Treasury yields in different durations. So you can see 3 months, 2 year, and 10 year. The point I'm trying to make is very simple. You can see in the year 2000 going into 2001, all these yields started to go lower. Same thing happened again in 2007 as we came into the 2008 recession, right? And it's happening again right now. Now, how low and how deep is this fall going to be? I don't know. No one knows, but it's very clear that this is happening again. So from my perspective, this is just an opportunity now to become, again, more defensive. This is not an opportunity, in my opinion, to buy more stocks. Of course, there are different sectors that are going to work better than others, but it's really an opportunity to de-risk. Now, I think buying bonds still makes sense. Of course, in the immediate term, we've had a big rally, so this is not the best point in time to buy bonds. But what this is really telling you is that we're getting into the very, very late innings of an economic expansion. In fact, we've peaked, in my opinion, and it's really an opportunity to become more defensive. Again, the signals have been there for 12 months. 2018 was a much more volatile year in terms of the stock market. S&P was down 5%, and I think despite the fact that we had a real sharp V-shaped reversal over the past couple months, if people just gaze at a few stocks, if you look at the trends for a 6 or 9 month duration, the trends are very clear. We're in a different environment than we were over the past number of years, and interest rates are just reflecting that. So I think getting more defensive, not necessarily shorting everything outright, that's not my call, but getting more defensive. It's been my call for 12 months. It's nothing new, but I think now that the yield curves, or part of the yield curves, are starting to invert, this is kind of percolated a little bit more, or come to surface more in the financial media. So I hope this is helpful, folks, and I'll see you soon.